Hi, I'm Kals, and welcome to episode 7 of The Comparable, the series in which each episode spotlights two companies building similar solutions in two different emerging markets. And for this episode, we're highlighting two companies that are leveraging Stablecoin to move money faster and more efficiently across borders. For those who may not know, Stablecoin is a type of cryptocurrency that is pegged to the value of a stable asset, like a fiat, which is a government-backed currency, like the US dollar. Unlike other cryptocurrencies that you may know, like Bitcoin or Ethereum, whose value can swing pretty wildly, which we've seen really recently, stablecoins are exactly what's in their name, stay stable. They have a ton of use cases, especially for emerging markets where local currencies and markets can be much more volatile. So for someone sitting in an emerging market, instead of holding their money in a more volatile local currency, they can decide to hold it in a USDC, which is a stablecoin pegged to the US dollar, which allows them to preserve their value. We've seen stablecoin leverage for digital payments and remittances in emerging markets. Sending money abroad through traditional banks and remittance services can often be slow and expensive. So stablecoins can cut out middlemen and reduce costs. We've also seen tons of use cases with freelancers who are earning in US dollars, but sitting in an emerging market, and it allows them to not only earn in US dollars, but actually hold it in a stablecoin, which allows them to preserve what that value of what they've earned is. We've seen the adoption of stablecoin grow globally for some time. In 2024, the total value of stablecoin transactions is estimated to have surpassed $27.6 trillion, which is more than the combined transaction volume of Visa and MasterCard. In emerging markets, this is also pretty notable. In 2024, 39% of Latin America's crypto purchases were in stablecoin, and it accounted for over 50% of crypto transactions in Africa. In July of 2025, the U.S. passed the GENIUS Act, which stands for the Guiding and Establishing National Innovation for U.S. Stablecoins Act, which will not only lead to a deeper proliferation of stablecoins globally, it'll also lead to other stakeholders and governments around the world to view stablecoin with more legitimacy. Given that stablecoins are so hot right now, which is a Zoolander reference, it only felt right to highlight two companies this episode that are leveraging them to move faster and more seamlessly across borders. For this episode, we're having HoneyCoin working across Africa and spotlighting Felix operating across Latin America. HoneyCoin, founded in 2020 in Kenya by David Nandwa, is a platform that enables customers to collect payments, move money in real time using stablecoin and traditional rails, as well as issue bank accounts, debit cards, and wallets in over 45 markets across 4 continents. In August of 2025, they announced their $4.9 million seed round that was led by Flourish Ventures, with participation from players like Visa, Stellar Development Foundation, and Musha Ventures. Felix, co-founded by Bernardo Garcia and Manuel Godoy in 2021, is a fintech platform that uses WhatsApp to enable people in the U.S. to send money quickly and safely to users across Latin America, leveraging stablecoin to reduce foreign exchange costs and operational inefficiencies. They most recently announced their $75 million Series B round in April of 2025, which was led by QED investors with participation from players like Endeavor Catalyst. Both companies are using stablecoin in their respective markets for one of its most relevant use cases, to move money faster and more seamlessly across borders. We'll hear from both David and Bernardo about their vision and much more in this episode. Let's get into it. My guests today aim to redefine financial access for millions of people, building companies that allow money to move across borders more quickly and more seamlessly. Bernardo Garcia is the co-founder of Felix, a fintech platform launched in 2021 that allows users in the US to send money instantly via WhatsApp to users across Latin America, powered by stablecoin and traditional rails. David Nandwa is the founder of HoneyCoin, which was founded in 2020 and aims to become the operating system for money in Africa and beyond, integrating blockchain, stablecoin, and local payment rails for more seamless cross-border movement of money for both consumers and businesses. I'm excited to have them both on the podcast today to share their insights and their vision for what they're building for the world. So welcome, guys. As you guys know well, we're becoming increasingly more global and interconnected in the world, but the way we've been able to move money has actually been still very clunky, expensive, inefficient. I'd love to dig into how you both are addressing this with Felix and HoneyCoin. So maybe Bernardo, for you first, In a previous interview, you've talked about how past digital remittance solutions are only scratching the surface of total remittance volume globally. And I would love to understand a little bit more how Felix is addressing this problem differently.
Yeah, that's a loaded question, but one that excites me a lot because that's why we see the opportunity. But I'll go back a little bit on how we saw this opportunity and why I got us excited. So in 2019, when we started doing the research for what we're going to do around remittances and who to serve and what product to build, etc., we ran into these incredible numbers. One was remittances to Latin America were around $120 billion a year from the US alone and growing in double digits every year. So those numbers blew our minds. The second number that blew our minds was that around 15% of all remittances originated in the US going to Latin America were digital. Only 15%. And then if to that you add that in that time, 2019, there were already, 20 companies doing digital remittances, some massive, by the way, like Remitly by then had been around for almost 10 years, around 10 to 15 years. Zoom, which at some point was acquired by PayPal, had been around for 20 years. And then there was a long tail of many other companies, and all of them collectively had 15% of market share. The other 85% were people going to mom and pop shops and other kind of shops and sending traditional remittances. So that's where we saw an opportunity. Incredibly fragmented market. Very few people going to digital solutions. No clear winner there, obviously. And then that for us led us to get excited about just understanding the behavior of people and why they were doing what they were doing. So on one hand, we went to the streets of South Philly, which is where we were living back then, and just started talking to people and trying to understand their behaviors. And we learned a couple of interesting things. Like one was they knew about the existence of digital remittances solutions, but they didn't feel comfortable with trying them necessarily. Because on the other hand, when they went to stores, contrary to what most people would think, they thought sending money in a store was very easy. And so that blew my mind. Like, how is it easy to go to a store, commute, getting a long line, especially because most people send money around the same time, Fridays and Saturdays when they get paid. So that's when long lines are there. And then you're telling me this is easy. And they're like, yeah, because it's easy. Because when it's my turn, I just tell, Nacho from the store, please do this, this, and that on my behalf. And boom, I pay and I'm out. So that's easy. It's easy to give someone instructions. And then if anything goes wrong, it's easy to tell that person to fix it for me. And I'm like, okay, I like your concept of easy. And then when you go to digital solutions, you're like, yeah, I may go on app, but I'm not the most adventurous tech savvy person. So what if I get stuck, or what if I actually send the money? And what if something goes wrong? Who do I call? And if I call someone, will they actually give me support quickly and in Spanish? And will I get my money back or whatever? All these questions start to arise. So that's really the barrier that we're trying to break. So anyways, we learned that digital seems complicated. Human is easy. How can we do something that's digital, but it's human? And that's really what led to Felix. Just focusing on Latin Americans, which want something human and easy. We want to digitize them, obviously. So let's try remittances on WhatsApp, offering a very human-like support. And so that's really where we found our edge. And that's what led to what Felix is today.
Yeah, I love that. It really resonates also from a South Asian perspective, because most South Asians are the same as well. It's like, and I'm sure it's the same, David, for Africans, like not to put us all in a monolith, but that behavior is quite similar. We like to physically go to send things through Western Union, right? That's how we think to do stuff. So digital remittance is interesting. It's also what I love about what Felix is doing is like you're going to where users already are on WhatsApp, which is where most of these users are constantly, not only just, they're not necessarily transacting as they are now with Felix, but they were there in terms of having conversations. But maybe let's first talk to David as well, because I think it's also interesting. You talked about this, you started HoneyCoin at the height of the pandemic in 2020. And you talked about this also in a recent interview, that existing financial solutions in Africa were trying to build on a broken table. Can you share more about how you tried to do things differently as well, similar to, how Felix was doing things differently? And, we'll talk a little bit more about your use cases. Would love to hear about your key use cases today. And I think it really has evolved since when you guys first started 5 years ago.
Yeah, no, thank you so much. And it was lovely to hear the Felix story as well, which was super insightful. And I was, smiling because I can draw a lot of similarities from why we started and even how, those early conversations definitely impacted how we built out the solution. So for me, I'm coming from this perspective of, born and bred, living in Nairobi, living in Kenya. And this is where M-Pesa was born. M-Pesa was one of the main inspirations for a lot of like this global P2P apps, such as Cash App as well. Jack Dorsey has talked a lot about, the impact M-Pesa had in how they were starting to think about P2P systems, because at the time, people went from, cash only, where there were agent networks, to being like, one very insightful thing that really impacted me was in the early days of mobile money as well. People actually used to walk, not with their phones, but with their SIM cards to the agent networks, because they used to, like, their phones used to get robbed a lot, right? And so that's also what inspired Safaricom to like heavily invest back into like the mobile money sector, because we're seeing that people are treating their SIM cards like a wallet. And then we'll just digitize this mobile money system and then turn it into like an actual, e-money system for people to move money around. Now, I give that pretext because when I was starting HoneyCoin in 2020, I was coming from the perspective of like, I've worked in the traditional fintech side of things, worked at some of the largest fintech cos on the continent, also worked at like the very traditional, on the traditional side of things with the very large banks as well. And when I was in, during COVID, I was also contracting and working with different companies from like the US, UK, and I was getting paid by them. And a core reason for why I started HoneyCoin is a very large, kind of like a US-based remittance player one time came and just told me, hey, your account is frozen because you're from a high-risk jurisdiction. Now, there's nothing else I had done but being born in Nairobi, being born in Kenya, right? Obviously, I provide them supporting documents, but they told me would unfreeze your money in 3 months. Now, this was very, very frustrating and doesn't actually come down to the broken table piece, but a core motivator for why I started HoneyCoin was actually that the fragmentation that existed on the continent didn't just exist because we didn't have solutions, but it's that we didn't have solutions being built by people who understand the context of the market. And I think that's a very helpful pretext, because if you don't understand the context, then everyone you're serving is pretty much behind a foggy glass mirror, because you see them as this external company. And so we had, and from where I was sitting, you had all of these really cool platforms. So platforms I respect, like Wise, Bernardo mentioned Remitly, WorldRemit, some of whom are our customers today, which I like to highlight because it goes back to like that connection that we've now been able to give them. All of these platforms are doing amazing, but they were not doing amazing within the African space, within the African context. And so when I started having conversations with just customers, and this is actually one of the reasons why we started B2C and not B2B, all of them said the same thing, right? It's 2020, but I have to walk physically to a bank, write in a physical remittance form, which is a SWIFT remittance form, just to send money to Uganda. Uganda is literally thousands of kilometers away. Actually, some borders between Kenya and Uganda, you wouldn't know which is which, right? But this is still a scenario where someone is literally filling in a physical form and they're saying, I want to send money. It cost me still 5-10% to a neighboring country as Tanzania. I saw this fragmentation. Everyone was saying the same thing. But the interesting thing that they were doing, and I spent a lot of time on these platforms, is they were going to crypto P2P platforms and trading, P2P cross borders. So they were saying, I'll give you my cash in my M-Pesa wallet. You give me stablecoins. Funds will be held in escrow by one of the large platforms, such as a Binance or at the time, Paxful was also very big. And that was it. So it was a trust-based system built on, I reviewed David and said that he's good, and XYZ person reviewed Bernardo and said that he's trustworthy. So I'll give him my fiat and I've not even received the crypto. Now, this was very much an aha moment to me, because I already knew from my background that I think crypto would have played a much more broader role in terms of the impact of not just cross-border payments, but payments in general. But this activity was already happening. And so very quickly, I embedded myself into all of these P2P platforms, and I realized, yes, it's cool. Yes, it works, but it is not what we need, actually. What we need would be a bridge of blockchain infrastructure, crypto, stablecoins, and just your traditional mobile money and banking systems. And that is why HoneyCoin exists. Today, I say we are basically the bridge. We're the lubricant between traditional financial systems and stablecoin technology. And the reason the table is broken is because these systems were not built to connect people. They were built to hold money and move money within very closed ecosystems. And so one of the ways that we are now making this table more efficient is we're saying we cannot replace that system. People still love to use Western Union. Someone still loves to hold money in a bank because it's a bank. And there's very strong ingrained, let me just say, psychological connotations with saying I'm abandoning, this banking system. And I also don't believe that will be the be-all end-all solution. And so then now what we told users is just the way that you're using your mobile money systems, just the way that you're using your banking systems, we're giving you an augmented layer where money moves faster, where it's cheaper for you to send remittances and payments, and where it at least works at scale. And we've now just seen phenomenal growth over the last 4 or 5 years. But I'll end with that pretext just to say that a lot of the reason that we started this problem is because, yes, we saw the value. It was around $100 billion when we started in terms of remittance inflows into Africa. But more importantly, we are just trying to make that broken table have 4 legs and be very stable for like all of these different consumers. And now all of these businesses who are serving that are receiving and accepting payments on the continent. Just to give a small pretext and intro in terms of like why we do what we do.
I love that. It's also like kind of actually saying that instead of just building on what's already broken, just start the foundation from scratch, build from the ground up.
Exactly. And then now come and build, try to bridge that existing relatively broken infrastructure, make it more efficient. In fact, one of the things that I like to tell folks is, and our investors always ask us this, is like, are you trying to replace the banks? I always tell them no. In fact, banks like to work with us because we're not here to say, you guys are horrible, terrible, you should not exist. We're actually coming to say, hey guys, you guys have built a cool system. It works in some regards, but there's areas where it's very broken. I'm coming in to help you serve your customers better, which means you'll own them for longer. And it's not just that we would also own customers, but then we make the experience better for both sides. And then innately, people now are sending more money back home, are transacting more domestically, and businesses actually want to do business in emerging markets like Africa.
I love that. And also, Bernardo, you were nodding a lot while David was talking. I was curious if anything resonated with your experience at Felix with what he was sharing.
Well, I completely agree with a lot of the things that David says. What resonates a lot is your story about how broken the infrastructure in your specific region of the world is, and how then you visualize that here it should be different. And it's really the same for us. That's why we've only focused in Latin America and we haven't expanded to other continents, because we believe that every region has its own nuances. Every region has its problems. Some have actually fixed some things in some ways, others haven't. Like mobile money was fixed in Africa way back, and on our side of the world, it still hasn't been fixed, which is insane. And so every side of the world needs its different things. But then I also agree a lot with what you say, like customers, you can't entirely change their habit, and you can't, I think if we go with the belief that we're going to change entirely how they behave and what institutions they trust and which ones they don't, I think that would be very wrong to do that, and rather think about what do they like about what they do, what parts are lacking, and then what gaps can we actually fill. And if those banks or other players then become our allies, those are actually incredible ways for us to grow as well.
First, stablecoin is speed just by virtue of what it is and how it moves. But the on-off ramps can be a little bit more challenging depending on the market that you're working with when it comes to general regulation and operating in these different markets. I'd love to understand a little bit more, and especially, both of you are really tackling it from, your respective continents, right? And every market has different country-specific regulations that lead to how maybe you implement what you're building slightly differently, right? So, maybe we can go Bernardo first in terms of, I know that, you're powered by stablecoin in Mexico, maybe not in every market that you're in, depending on, and I know you're co-founders from Venezuela, like there's a lot of volatility in that market from a currency perspective, right? And so curious about where that, how you navigate the different regulations that exist, the different things that come up based off of the markets that you've been working with. Has it changed where you go to first versus where you maybe are bookmarking it for going in the next phase? Just curious about that journey for both of you, and maybe Bernardo first and then David.
It's interesting because when we were designing Felix in the early days, we were not really thinking about stablecoins or any specific rails. We were just thinking about understanding customers, and then it goes back to when you go and you see what people what the challenges that they're facing, we learned that the single thing that people care the most about is speed. If I get my money real time, that's the maximum value I, as a customer, give to whatever service. And so then for us, we had it ingrained in our brains that we needed to offer real-time payments wherever we go. So then we go to, okay, how do we make this happen? And we started playing and trying all the possible rails. We just couldn't achieve the real-time aspect that we wanted to offer our customers. And at some point we started, trying like, okay, there's been all this talk about how crypto is going to solve cross-border payments. Back then, 2019, there was all this hype. 2019, 2020, and beyond, all the hype on crypto, but mostly the very volatile stuff. Then came NFTs and whatnot. And so obviously when we're thinking about, we just want to move money from A to B as quickly as possible. Anything that's volatile is not as interesting to us because it's unnecessary risk.
And so it defeats the purpose of what you're trying to achieve, right?
It defeats the purpose, exactly. So then we learned about stablecoins, and we're like, well, this whole thing sounds very interesting. Like it's crypto, so it should solve the speed side of it. It's pegged to the US dollar, so it solves the volatility side of it. Let's look into it. And we started doing crypto transactions, and it really did solve it at a very small scale. Just testing personal wallets to personal wallets, getting money A to B. And that's really when we started falling in love with the technology. Which today, Kals, like you say, at Felix, we've our approach has been, if we can do crypto, let's definitely go and do it, but not every market can. And there's different reasons. Some of them it's regulatory. Some countries are just not comfortable with this technology yet. Others, there's just no guidelines on it, but there's also no infrastructure. So mostly no ability to off-ramp. And that happens a lot to us in Central America specifically. So anyways, today, most of our Mexico volume runs on stablecoins, and small percent really in other markets does as well. But it's something we're actively trying to change. And yeah, in some countries, we've even considered like, hey, how do we actually help other players or even think about building the infrastructure ourselves? Because the value of getting real-time payments there for our customers is just really, really important. And David, actually, you leave me thinking a lot because we know the customer's pains, like you learned from your B2C business, but then if we ever solve it for ourselves, it actually leaves me thinking if it's something we should think about solving for others as well. But anyways, yeah, that's really why stablecoins are so exciting for us.
Yeah. What about for you, David, considering that you guys are really this Pan-African, you're working across the continent. How's that been for you?
No, thanks. I appreciate you asking. And I think the regulatory conversation is one that's super close to my heart because I like to think about HoneyCoin as having evolved from being this Robin Hood figure, like we're building next-gen payment solutions and we're doing it where the regulation doesn't exist. And, almost like power to the people, we're trying to fight for this better system for the businesses and consumers wanted to serve, to now we've become a lot more of a pragmatic, more of a diplomat of sorts, meaning that the advocation has worked. And now what we're trying to do is within the regulated environments that exist today, actually continue to serve our customers. The reason I wanted to set the stage in that way is when we started HoneyCoin, there was no African market that had crypto regulation. So everywhere was a gray area, meaning that apart from the Arabic regions like the Algerias and the Egypts where crypto was fully legal, every other market, all the central banks basically just took a wait and see approach in that, look, we don't know about this Bitcoin and stablecoin stuff. You guys are welcome to invest in it at your own risk, right? So it was more of like a cursory, hey guys, we are not willing to regulate this at this time. Feel free to actually transact in it. Now, that was a good and bad thing. The good was it basically meant innovators like ourselves were not doing anything illegal in any of the markets that we operated in. The chain analysis report that came out in 2021 showed that the top 3 markets by crypto adoption at that time was Nigeria, was Kenya, was the likes of South Africa as well, that were leading. But these are not markets where there was any regulation. what that has actually caused is a couple of negative things that have happened where like you have markets like Nigeria, which initially took a very heavy-handed approach and then what became more lax. Markets like Kenya, which also took a bit of a heavy-handed approach and became a lot more lax as we went along. But I think to me, the thing that we had to do in terms of from an evolutionary perspective is we had to stop playing the role of just being builders and now want to be in the room when regulation is forming. Because the thing that we started to realize is when the builders and the entrepreneurs just play this, oh, wait and see approach, I'll wait and see what these guys decide, and then I'll operate within the environment, is we would have regulation that does not actually work for our market. I can give a very real example of that. In 2023, the Kenyan parliament welcomed myself and a couple of strategic builders in the room to understand everything crypto, everything stablecoins. And we had to start all the way from the beginning of what is a Bitcoin. Now, these legislators are smart people, don't get me wrong. But when it came to this new conversation, this new technology, they were starting very much from the kindergarten of what is crypto, what's Bitcoin, what is stablecoins. Fast forward 2 years down the line, I have been in many, many rooms with regulators and legislators. Today, we have a virtual asset service provider bill that HoneyCoin has directly contributed to that has actually set in stone regulation that is going to apply more broadly to the East African market. That is a very big win. And before, I did not consider myself in any way, let me just say a regulatory advocate or in any way like an advisor to governments. I still don't see myself as that. But what I've come to realize is when we as entrepreneurs, and to anyone who'd be watching this, I would very much encourage that we as entrepreneurs need to start thinking, if we're building in these innovative spaces at the edge of technology, so to speak, we need to be already trying to influence how regulation will form. The Genius Act that just passed in the US is a good example of that. There's companies like Coinbase, which were very vocal in saying, this is how you should regulate us as businesses. I think if we want to see the space flourish, both from an emerging market perspective, when we think Africa, when we think LATAM, we need to be like, yes, I'm building this really cool technology, but more than that, I'm helping to shape, how regulation will form. And to finish by ending with a note to say that I think by doing that on the Africa side of things, we've now been able to build a very, very good relationship with these regulators. We are not like these the crypto vigilantes who are helping to move money away from the banking system. These guys are like, hey, David, we are doing a policy meeting and we want you guys to come in and talk about what it is that you guys do. Because it's now very much, we can see that you guys, are coming from the right perspective. We just weren't as ahead of you in terms of building. And so now it's creating this much better, let me just say, environment for future builders. So where we've done a lot of that groundwork, to me, I'm very much more bullish on the crypto space, the Web3 and stablecoin payment space in LATAM and Africa, because I think the Felixes and the HoneyCoins of this world, we've basically just done a lot of that groundwork to make sure that now, for all of the future builders who will come up, it will now be within an environment where at least there is a structure and a framework. Now, in Kenya, there's regulation. In Nigeria, there's regulation. In South Africa, there's regulation. In all of those markets, we're either licensed or have approval to operate, only because we had taken that kind of like pro-reg approach. And I truly am, I used to be anti-regulation. I'll be very honest. I was not always the pro-reg guy. But the reason I'm pro-regulation now is because I've realized if we do not have guardrails in place, then everyone will always look at crypto and Bitcoin as the scam, sector, right? But when we have pro-regulation, when we have guardrails in place, and we have really reputable companies operating, then everyone now starts looking at this space as a trusted, secure environment where they're willing to actually transact and do business in.
Yeah. And I think those are such great points, because what you were just saying, even about the Genius Act, is, stablecoin has been proliferating for some time, but in a lot of ways that just kind of put a stamp of legitimacy on it from a top-down perspective, which then led to other governments around the world. Because I was thinking about this when you were talking about Pakistan. We're the same, right? It's a frontier emerging market. I'm a VC investor and I've been working in that space for a long time. We're always on the front road of like helping the regulator think through things, everything from like holding company legislation to now having conversations with the state bank around stablecoin and how we think about the off ramps. And, sometimes the regulator needs to just catch up. And so it needs the private sector to be able to help them really think about it more practically. And, I'm curious for you both, because, as we're talking about the Genius Act, but you guys have actually had like a lot of partners along your path, right? That have continued, that are, as you guys are deepening and are a part of this stablecoin kind of evolution of what it means now and how it's really becoming part of not just the vernacular, but really part of the mainstream of what stablecoin is and how we can really leverage it. You guys have had a lot of like key partnerships, strategic investors, and David, maybe for you first, HoneyCoin, you've had MoneyGram, Stellar, Stripe, Bernardo, you've had similar ones. And your recent funding round is Visa Ventures, which has been really vocal in their support of stablecoin to enable the future of payments. Bernardo, similarly, a lot of the ones that I just mentioned for HoneyCoin are similar partners for you at Felix, but you also announced an alliance with MasterCard. And I've had this like LinkedIn pinned ad post from the head of MasterCard talking about stablecoin always whenever I open my LinkedIn. So that that's also the case for them. And you also, leverage rails from partners like Bitso and Circle. Can you both talk a little bit more, maybe David first, about the importance and significance of these partnerships and how it pertains to the future of HoneyCoin and Felix as well? Would love to hear from you first, David, and then Bernardo.
Yeah, no, thanks. And really good job in terms of setting the stage. And I couldn't have said it better. I think in terms of the way you've broken it down is in my view, it is a heartbeat of where this industry is today. We went from zero pulse in 2016, in 2011 when Bitcoin came out, 2016 when Ethereum launched and now was very much became very much a de facto chain. That was like probably you could try and feel for a pulse, but there was nothing there. And it's also only because Web3 was this thing that a bunch of enthusiasts and very big believers were focused on and like were utilizing. And I'm coming from that perspective of like being in Web3 crypto from 2017, 2018, and I can just, to me, I've seen that evolution come into play. But more than that, these big names, these very big brands who have been there for time immemorial, and we're talking about the likes of Visa and MasterCard that have been there since the 1900s. I say 1900s, which sounds like a very, very long time, but of course, mid to late 1900s. I think it's more than anything, it is a validator that stablecoins and blockchain technology is here to stay. It is going to become even more permeated as things evolve. And the likes of Visa and MasterCard are not just now playing a wait and see approach. They're saying, we know that this is where the world is moving. And we want to not just have stakes in the businesses that are moving in this direction, but we also want to be involved in powering, these kind of like stablecoin payment disbursement rails, and then in general, blockchain-based settlements. Now, one of the reasons I'm very bullish on this is issuers and acquirers like Visa and MasterCard also know that the way the system works today is brilliant. It's amazing. It is one of the feats of technology, but it is not like the perfect utopic scenario, right? Card fees are still very expensive. Banks settling merchants is still very expensive and slow, right? This is something that has improved over the years, but it is something that is still very much broken. I like the fact that when we were bringing on Visa on as part of this fundraise, and we had many conversations just like this one on like where the industry is today, the work that we are doing at HoneyCoin, and talking about just the broader vision and mission that we have for how the financial world we want to exist today. I liked the fact that when we were speaking to the Visa team, they were very much, David, like, this is the same thing that we're seeing, and this is the direction we see the world is going, and we want to be involved, not just in your journey, but we want to be involved as a larger organization, towards this kind of like direction. I think that is the thing that we needed. A lot of this validation is not just the thing that we needed in terms of like broader industry growth, but I think the thing that we needed also so that we can be able to onboard the next billions of consumers and the next millions of businesses into this ecosystem. I say that because there is a psychological angle that we as builders and entrepreneurs can never ignore, right? It's like if your mom told you to drink this tea because you'll feel better, you'd listen to her because this is someone who has your best interest at heart. Consumers are the same way in a different sphere, right? If a particular retail customer heard that Visa is settling their merchants in stablecoins, they are they're more acceptable to swipe their card if that kind of like payment service provider also accepts stablecoins. If this happened before a Visa or a MasterCard or a MoneyGram said that, hey, we're allowing for stablecoin remittances, that would be a different conversation. We are moving from the convincing leg to, I think, the adoption leg. And this is now where we go not from 0 to 1, but 1 to 100. And I think it couldn't be a better time to be building within the financial services industry and space, which is what just makes me so much more excited to be running and building HoneyCoin today. And that's would be my 2 cents in terms of your question.
Love it. Bernardo?
Yeah, I have to say that I totally agree with David, and really not a lot to add to that. I think on our side, on our partnership history is in the early days, our partners were the crypto first companies. So Stellar, they supported us a lot. Circle, they supported us a lot. Bitso, but it was still like us working with a lot of crypto companies and kind of like what you're saying, David. It's sort of like the Robin Hood aspect of, oh yeah, we're the innovators, the early adopters, and we're using this technology that no one else is, which is exciting, but it just gets you to a certain point, because eventually, once you want to go for mass adoption, and you want this to go everywhere, things need to happen. And so right now it's super exciting, after the Genius Act and all of what's going on in the US. Suddenly you see all these massive companies, the Visas, the MasterCards, the Stripes, and even banks now super curious. And so this is almost like the best time to be involved in stablecoins, and companies like us, like HoneyCoin and Felix. We have an advantage because we've been here in the trenches for 5 years or so. So we're already way ahead, and we can help a lot of this transition. But now with the validation of all these massive players, this is just going to go everywhere, and stablecoin technology and blockchain is going to be powering a lot of our day-to-day transactions. And to me, an exciting future is the problem is solved. Transactions move seamlessly at a cost almost close to zero, and no one has to even know or care what the technology that is powering it is behind the scenes, because it's just like it just became mainstream. Everyone's using it. Visa, MasterCard, you name it. And so it's exciting to have partners like that in this next phase. Yeah.
You kind of answered my last question, but maybe we can take like a line for both of you, because you really talked about what is the future of all of this, right? And I think what I love about, and you guys hadn't met before this episode, I hope you'll talk to each other after this, because I think what you're building on different sides of the world is philosophically, to me, sounded, as I listened to both of you in this interview, but also as I researched this, I was like, you guys are philosophically very aligned with each other. So I think it's really cool to kind of see what you're building and how similar it is. It's also, you guys are really thinking about how money should, you are meeting where everybody is in terms of this is the way money should move. It should be fast. It should be seamless. It should be frictionless. But I'm curious, this is where we are today. Where do you feel the future looks like for finance as a whole? And what role do you see both of your companies playing in that future? And maybe we can go Bernardo first, really quick, and then also David really quick, so we can end this on a great note.
Yeah. Well, I guess the way I think about it is today, the business we're in obviously pays our bills and that's what we live on. But eventually, as this technology becomes more mainstream, at least in businesses like ours, the cost of sending money will trend to zero, and we'll be part of that. So we'll eventually have to reinvent ourselves to figure out different ways to get our revenue from existing relationships with our customers. Because eventually, sending money from US to Mexico or Kenya or wherever will and should cost zero. So obviously that's going to be an interesting challenge for any company in the space. But I think for us, the future is about building stronger relationships with our customer base and enhancing our value propositions for them, so that we, continue to grow those relationships and be part of that change. So
awesome. Thanks. David?
Yeah. No, yeah. I think in terms of like where I see the world going from this perspective and what I think the future would look like, I agree with Bernardo 100%. The cost of sending money will go down to zero. But with what's happening within AI and machine learning today, the cost of building software will also go down to zero. So anyone will be able to build a remittance app. And then also the payment systems themselves will be open networks that anyone can build on top of. So the value will now then become who is decreasing and building the best software layer, and let me just say communication or interaction layer for an individual as a business or a retail consumer to interact with each other, right? So it will become more about how are you deploying a solution that makes sense for a user and a consumer, because a customer is not going to care about when they pick up their phone to dial, how the network and infrastructure works that makes the call possible. So I do not think that builders and entrepreneurs will not have solutions to build. I think the solutions will just look fundamentally different to what exists today. I think the companies that will exist, and this is a bit of a doom and gloom, I think many companies will die between now and the next 10, 20 years, but that happens across all industries. I think there'll be a lot of companies that will succeed, which is my positivity, but those companies today will not be able to sell transmission and acquiring as a service because it will be a commodity. But the benefit is when those things trend to zero, revenue unlocks, meaning people will be able to do business with each other much better, and then we'll at least have time to focus on some of the more meaningful problems that also still exist today within the financial system, such as investments and yield and how money works for people, and also just in general collaboration. So it's a very exciting time to be building in this space. But an anecdote I will also end with, and I love that you're doing this podcast, Kyle's, but you're coming on from this VC angle, is I think also for investors, it will look differently, but it will look differently in a positive way, because I think that investors will now start to have to play a more involved role in building companies, because when network effects decrease, that means also builders in general would have a lot more resources and capital. And so things like, this podcast, things like The Comparable become also fundamental, because storytelling and distribution will be the moats in the future, I think is my prediction.
Thank you guys so much. I've been so interested in this space, but also I'm actually so interested in not what's just happening now, but how this is leading to the next chapter of things. So thank you both for sharing so much about your respective companies. I love what you both are building, and I would love to see how you guys both evolve as this future evolves so quickly as well. So thank you both for being on the show today. That's all we have time for today. I hope you enjoyed this episode as much as I had recording it. Many, many thanks to David from HoneyCoin and Bernardo from Felix for joining me today, for sharing their vision, their philosophies. I was super inspired hearing about it and just kind of understanding how this fits into the future of finance as a whole, because I think you'll just be seeing Stablecoin really take off. And I'm excited not only for what's happening right now, but also for the next chapter of what's to come in terms of use cases and how it's going to be leveraged by players in emerging markets, but also just globally. Please subscribe wherever you listen or watch your podcasts, YouTube, Spotify, Apple. Please rate us high, hopefully. Leave us a comment, send us some notes if you have any. And thanks for tuning in. Until next time, bye.